Well, the Fed finally made their move, but will it be enough to ignite our housing market? And did the Fed's rate drop equate to a drop in mortgage rates? Let's discuss the immediate reaction and what we anticipate in the coming months. Sorting through the noise and simplifying the data. When it comes to Tucson real estate, the numbers tell a story. Let's break down the latest market trends so you can make an informed decision about buying or selling in 2025. Hello, this is Jeff L. with L Group at Ambrell Realty. Today is Tuesday, September 17th, 2025, and I'm bringing you our monthly market data covering August 2025 and some significant economic developments that are directly impacting our local real estate market. Let's start with today's major economic news. The Federal Reserve cut interest rates for the first time this year, reducing the federal funds rate by 25 basis points or 0.25%. This marks the Fed's first rate cut since December 2024, and it came after months of economic data showing a weakening labor market that finally outweighed concerns over persistent inflation. So, did the Fed's rate cut translate into lower mortgage rates? The short answer is yes, but in this case, the cart came before the horse, with mortgage rates dropping steadily over the past month in anticipation of the Fed's rate cut. This brings mortgage rates close to 6%, which is the lowest level we've seen in 3 years. This is huge news, given that we saw rates in the 7s not too long ago. So here's the opportunity we're seeing. Sellers, if you've been waiting to put your home on the market, prospective buyers are finally starting to re-enter the market. Last week, mortgage applications increased by 20% over the same period last year. If you're on the fence, we'd be happy to provide you with a complimentary market analysis for your home to determine if now is the right time to benefit from increased buyer activity and lower interest rates on your next purchase. Just visit lgroup.com to request your market analysis or search for available homes. Now, let's dive into our local Tucson market data for August 2025 to see how these national trends are playing out right here at home. Keeping in mind that we're looking in the rearview mirror, so this week's rate improvement won't start taking shape until we report next month. And August is historically a slow month for sales activity in Tucson. With that said, pending sales were only down 1% from last year, with 1,278 homes going under contract. We added 1,904 new listings and 1,281 closed sales. The median sales price came in at $340,000, down about 2.9%, and the average sales price was only down 1%, hovering around $403,000. And a number we find incredibly important when tracking Tucson home value trends is the ratio of list price to sold price. That continues to remain strong, with homes selling close to 98% of their asking price. This continues to be a very important time to stay informed. The Federal Reserve faces a delicate balancing act to support weakening labor market, but they remain cautious about inflation. The markets are already pricing in an approximate 60 to 70% chance of another quarter-point cut by December, but much will depend on upcoming economic data. For our market, this creates a unique window of opportunity. As always, if you want to discuss any of the information we covered today, or if you're curious about how these market conditions might affect your specific situation, give us a call. We are your trusted professional advisory team, and we're here to help you make informed decisions in this evolving market. This is Jeff L. with L Group at Ambrell Realty. Thanks for watching, and we'll see you next month.